Welcome back. Piramal Pharma, that's the next stock on our radar. Surging in trade today. Ekta joins us to tell us why is there this up move here. Ekta.
Hi, thanks for that. Well, yes, Piramal Pharma is in focus in today's trading session because the government has initiated an anti-dumping investigation with regards to vitamin A palmitate. Now, basically, this is originating or is being exported from countries such as China, Europe, Switzerland. Now, Piramal Pharma stands to benefit because the company is the sole producer of vitamin A in India. I do understand that the company imports the raw material of vitamin A, processes it in India and sells it to food as well as consumer companies that utilize it in the country. Now, there has been dumping of vitamin A which has been taking place, and the imported vitamin A was coming in at much cheaper prices. So with regards to the initiation of an investigation with regards to anti-dumping of this particular vitamin A, it should be possibly a benefit for Piramal Pharma.
Okay, all right, Ekta, thank you so much for explaining that to us. The stock is high by 6% in trade today. The other stocks which are in focus today are Religare Enterprises and MCX. Both stocks are reacting to some news updates that have come in. Surbi is here to tell us all about it. Surbi?
Hi, thanks for that. So Religare is gaining traction in today's trading session, but that's because the lenders have approved one-time settlement for outstanding dues for Religare Finvest. Now, Religare Finvest is the NBFC arm of the company. Finvest owes close to 5,344 crores to 16 lenders, including the likes of SBI, Bank of Baroda and Punjab National Bank. And the company has proposed 2,320 crores as one-time settlement, which is close to 57% haircut to the outstanding dues. The management in its press release also said that they've been taking all the corrective measures suggested by the RBI so they can restart their lending business. The management was on our channel earlier and they have said that 88 to 85% of these dues have already been paid and the remaining will be paid by end of January. Also, MCX is in focus today. That is because over the weekend that they've announced that it extends its service contract with 63 Moon Technologies for another 6 months. They were supposed to switch to TCS as a service provider, which in turn would reduce their operating costs. Now, Morgan Stanley has written on MCX with a target price of 1220, which is a downside of close to 20%. They think that the switch to TCS will now not happen until Q2 of FY24, which will increase the cost estimates in the short term. They are valuing MCX at 28 times FY24 PE, whereas currently it is trading at 41 times PE. Also, ICICI Securities have downgraded the stock to an add from a buy rating with a revised target price of 1669 versus an earlier target price of 1795. They say that the new extensions of 6 months is longer than the earlier estimated of 3 months, and that's why they expect the Q3 FY23 EBITDA to be lower by 10% on a sequential basis due to higher software expenses. They value the company at 31 times FY24 PE.
All right, Surbi, thanks a lot for that. So that's about MCX. Problems galore for the stock with the delay in this plan that they have with their IT services provider, reducing the prospects of cost cutting by the company up until the second quarter of next financial year. Meanwhile, just keep an eye out on a couple of these consumer discretionary names which are seeing a sharp dip. Page Industries is at the low point. Jubilant Foodworks is seeing some selling. In fact, why just discretionary? We have a lot of the staples falling as well. Marico and Colgate, both of them at the low point of trade, along with United Spirits, another discretionary, all of them at the low point. So just keep an eye out on these names, which are seeing some fresh selling at this hour. NMDC is the other stock which is in focus. They've increased their lump and fine prices by about 500 rupees per ton as global and domestic iron ore prices have risen. Nigel?
Well, that's right. NMDC has gone ahead and increased their prices effective January 1st. And on lumps, they've reported that they've increased it by 200 rupees per ton. However, I understand that in various parts of the country, well, it's a little bit higher as well. In some parts of the country, lump prices are high by close to 500 rupees per ton. For fines, well, they have reported that it's up by close to 500 rupees per ton. What are the factors that are playing out? Well, China has been reopening. So that's why, in fact, you've seen that global iron ore prices are up by close to 15% in the past 1 month or so. There have been price hikes that have been implemented by Odisha miners, on iron ore. So it gives them reason to go ahead and increase prices. And also pellet prices, well, that has moved higher big time. So that gives further reason for them to go ahead and increase iron ore prices as well. They've also updated on their sales numbers for the month of December, and that's come in a little bit lower by close to 2% on a year-on-year basis. The other one is MOIL. They as well have two pieces of news coming in there. One is they've increased prices on manganese ore with manganese content of around 44% and higher. That's been increased by around 15%, while with manganese content of less than 44%, it's increased by around 7.5%. Besides that, the December production numbers are very, very good. It's the best ever that they have stated. They've also stated that, in fact, the production number is up by close to 18% in comparison to November, and up by close to 91%, in comparison to November. That's the production and the sales numbers. Put all that together, NMDC and MOIL, both of them did well.
All right, okay. Nigel, thank you so much for joining us with all those details. So those stocks are in focus, but it's time for a break.